The following is a presentation of TFNN, The Trader's Edge, with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the January 15th, halfway through the month. How about that already? January 15th, terrific Tuesday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely treasure your presence here today, and my outcome is to help you to become a better money master and to provide you with the tools that each of us need to lead an inspired life, because leading an inspired life, folks, that is what it's all about. So with today's opening, and I'd love that rocky opening out there. I hope that inspires you to continue to, no matter what, to chase after your dreams and your visions out there. And so I'm just going to start today's session with a quote by Marianne Williamson. I love this quote. It says this: "Our deepest fear is not that we are inadequate. It's not that we are not enough." Of course, I just added that. Our deepest fear is not that we are inadequate. Our deepest fear is that we are more powerful beyond measure. That's right, folks. Many of us are afraid of success because of all the responsibility and everything else that might be on the other side. Don't be afraid of success. Go out there, take charge, and live your dreams out there. Let's go take a look at these markets. Normally, we start off taking a look at intraday charts. But, I don't like to just always do the same thing every day. That would be kind of boring out there. So we're going to start with the daily charts in the futures market. As we come to the session here, you've got the Dow futures are trading off about 40 points, down at 13,394. The ES Mini off 5 points, down at 1459. The NASDAQ futures, that's something we're going to certainly be paying attention to. That's trading out at 2719, off 9 points. Russell 2000 taking a little bit in the shorts here this morning. Actually, the leader in the clubhouse on the way down percentage-wise, off almost 0.7%. Why is that important? Because Russell 2000 has been the king, has been the leader on the way up. So we want to be paying attention to what goes on inside the Russell 2000. King dollar up 17 ticks right now, trading out at $79.71. Gold up 13 bucks. We'll see if gold can hold these highs out here. Most likely not, but we'll see. 1682 is what it's trading at. Silver is trading out at 31.24, up 13 pennies. Light sweet crude down 18 cents, 20 cents down at 93.94 right now. You've got natural gas up 3 ticks, trading out at 3.40. Natural gas getting back inside its price channel. Looks like it may, in fact, have been a false break to the downside. Now, across the pond, very important here, the DAX right now is off over 1%, down 81 points. The FTSE is off 19 points, only 0.3% out there. So we'll go take a look at what's going on those charts after we take a look at the U.S. markets here and the futures market. Our call number, as always, is 877-927-6648. If you are watching us on TigerTV, thanks so much for doing so. Remember, if you're listening in on the radio or your mobile device out there, because you went to tfnn.mobi, don't forget, if you go a little further over on the homepage of tfnn.com, you'll see the smartphone buttons over there. You can always catch this show streaming live to you on your smartphone. And again, the archives of this show on Channel 9. So let's start off with the big guy. Let's start off with the Dow out here. And if we take a look at the Dow now, the Dow actually in the futures market made their high on October the 5th out there at 13,536. But it's really September 14th. That high of 13,576 is the same high. Wait a minute here. 13,599. That's the October 5th. On September 14th, and that's really the swing point where we take a look at the S&P futures. I figured, well, let's just go see what is going on the September 14th swing point as well. Inside the Dow, the low of that is 13,437. That is the black line, the horizontal line going across my screen, which you can see here, and then it's a natural area right now of resistance. The Dow came up into it with wide-ranging bar, did that on January the 10th as it broke out above this little consolidation area. Of course, it lost its strength. The candles out there. So you can see, what I want you to be able to see is that the Dow is at that area. So it's tested a swing point. It didn't get all the way up to October 5th. It may not get all the way up to the October 5th, even the low of October 5th, which would have been the 13,489. In the futures market, versus the cash market, we're taking a look at some different elements out here, different swing points, different areas where price has been able to travel to, in an overnight session. So it is always good to be able to take a look at the futures contract as well, to really get an idea of where things stand. Now, if we take a look at yesterday's action, I'll go ahead and get rid of that horizontal line. What we had out here, basically a doji candle. Doji candles, in fact, you know, you did finish at the session high on Friday out here, almost like a hanging man. Looks like it is a hanging man candle. It is really a bearish candle out there. Hard to believe. In fact, I don't really put it as one of my top bearish reversal signals out there. They say that it is. I just don't trust it because you're finishing up at your session highs. It looks like a hammer candle, and it is, only it's really not a hammer because a hammer can only be done at the bottom. And we're going to take a look at a hammer candle such as the one that Apple broke yesterday out there. But let's one thing at a time. What we are seeing today, get a doji candle, and you do have some leaves falling off the tree, meaning the market is moving lower out here. So you got a bearish engulfing candle as well as some leaves falling off the tree. So the Dow may have done its work to the upside here for the time being. Let's go take a look at the other daily futures charts out here. Let's take a look at the NASDAQ. NASDAQ yesterday giving us a bearish engulfing candle. Now, it's traveling with inside that breakout session from January 2nd. Never really being able to break above the close there on January 2nd, which was 27.40 out here. So you got a little bearish engulfing candle yesterday. You're getting some additional follow through today. If we take a look at, as far as what the NASDAQ did, only able to get back to the October 17th swing point level, never making it all the way back to September. In this case here, it was September 21st, where we saw the actual high in the NASDAQ futures, the NQ out there. So the work to the upside. Now, you'll know if you've got if there's real weakness inside the NASDAQ, because as it moves down into the bottom of that January 2nd candle, that price is 26.86 out there. That is the open window. That's going to give you a real good clue as to where the NASDAQ is going to go. But you may have to deal with that sooner than waiting till then. Let's go take a look at the Russell 2000. Then we'll go over to the ES Mini Russell 2000, because that has been. Now, the Russell 2000, really, there's no pattern out here that I've been able to identify on the futures contract. What I mean by that, whether it be expansion of swing points, whether it be an A to B equals CD, that it completed out here. The Russell 2000 most certainly did break out above September 14th. If the Russell 2000 gets back below the 865.40 mark, it's trading at 871.70. The Russell 2000 will have had a false break to the top side. Now, we do know the Russell 2000 has been also traveling in a sideways consolidation range. It has to do that because on the daily chart, it moved into that overbought territory. Now, today, you had a doji candle yesterday, and, I would normally those have more meaning when they're up at resistance levels, but there is no resistance level that really I can identify out here. But you do, and we are receiving a bearish engulfing candle thus far today. Trading session in the U.S. markets, cash market has not opened, so we'll just wait and see. Now let's go take a look at the S&P futures contract. The S&P futures did make it up over the September 14th swing point. They did that. The S&P futures, whereas the cash index has not. S&P futures did it on January 10th, as was breaking above the resistance level out here. That was really from the January 2nd swing point. So even though the cash index has missed it by 2 points, the futures contract has not missed it. And so I'm going to say we've got a successful test of a swing point high. And today, if you get a close here, today I'd say the key number to be watching on the S&P futures is going to be this, 14.50.50. You get a close at 14.50.50 or below, you're going to see a stitched together bearish engulfing candle. Has just as much meaning as a one-day candle out there. And we will start to see the S&P futures roll over. Now, support on the S&P futures on the daily contract is going to be the bottom of the gap up of January 2nd, that level, 1438.25 out there. So what we're seeing here is we're starting to see a roll in the marketplace. If we go down and take a look at the 30-minute chart, if we take a look at the ES Mini, just as you would suspect here. Now let's go take a look. And what I mean by that, folks, is as we were coming into the 8:30 session here, you will see that price was moving to where? Moving to the bottom of that RSI oversold condition. You did get a little bearish bullish engulfing candle, I apologize, on that very next trading session. Says that we should see a bounce. The question is, are we going to start seeing lower highs? Or is this thing going to just really bounce out of here as it moves into or towards that overbought territory? But if we take a look at A to B equals CD down patterns, let's take a look at those. You see a completion. Let's take a look at coming off of the 5 o'clock session here, 5 a.m. Yesterday morning, that price high is 1470.75. Oh, I got to grab the right tool out here in order to draw that A to B equals CD. So that's your high. We'll use as the low out here. The 1030 session yesterday down at a price of 1460.25. And you will see a 1-to-1 A to B equals CD. 1456.50 is the exact number. And what the ES Mini got down to at 8:30 this morning, or during that 8:30 session, I should say, 1456.50. You got to love A to B equals CD out there, and I think you would like to learn how to understand those patterns and when you can see some reversals. So we're seeing that here with a completed A to B equals CD, as well as that bullish engulfing and having a little bit of follow through as we come into the open session here at 9:30. And also getting down to that oversold territory. So all things here working just like clockwork. And now the key, folks, is going to be on this intraday chart. Are we beginning to see lower highs and lower lows? Something to think about. We get back, we'll go take a look at the markets over in Europe, as well as the currency markets, because they're giving us some signals as well. 877-927-6648. We'll be right back.
It's always better when we're together. Yeah, it's always better when we're together.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks, and let's go start off taking a look across the pond at the DAX, trading down 73 points right now, off about a full percentage point. The chart you're looking at on the screen is the DAX going back to the September of 2011 time frame out there. Speaking of September in 2000, well, I went and saw Zero Dark 30 last night. Great movie out there. I recommend folks going to see that movie. Maybe we'll talk about it a little bit later, but a great movie out there. In any event, we're going back and taking a look at the rising price channel that the DAX has been traveling in, broke out of it for a while, broke back inside it with conviction on August the 6th out here, maybe it was August the 3rd. That might have been Super Mario Draghi Day out there. Needless to say, it did break back inside the rising price channel. If we take a look at, come on, work here, mouse. And if we take a look at what the DAX has done, this is kind of important because the DAX has really been pretty strong. The FTSE and the DAX have been very strong overseas. The DAX here now trading back below the January 2nd breakout session that we had in the United States. Now, the DAX never got outside of the body of that candle. The close on that day on January 2nd was 77.78. Never got outside that. Today, now pulling back into the December 31st level. Bearish would be closing below, the DAX closing below 76.65, 68 out there. So remember, it's always from strength as well as weakness where we get our signals. If we go take a look at the FTSE, now where's the DAX likely to travel to? Well, where it's going to travel to is if it closes back inside that December 31st swing point. And it may have been December 30th, maybe December 31st, they were actually closed. Because see, I got a duplicate of candles out here. And if the DAX closes inside that, it will likely go back and test the old resistance line, which now may be becoming new support. And that level is right about, I would say, Johnny on the spot would be right about the 74.48 level. It's traded at 76.57 right now. Let's go take a look at the FTSE over in London here. The FTSE here moving down. It's about off about 0.2%, only down 14 points here. Not, a little bit of a bearish reversal candle. Yesterday looks like about a dark cloud cover. Today, if you see a close below $6,095, that will set up a two-day bearish engulfing candle out there. What we do know about the FTSE is that it did do a 1.618 expansion of swing points. Those swing points being the September 14th high down to the November 19th low out there. So it did it really about as close as you can possibly get out there. So we may be starting to see the FTSE do a reversal as well. All these markets here perhaps making a turn to a retracement or perhaps a deeper correction out there. Let's go take a look at the currency market, see what we have going on out here. This chart, if you are just, just kind of new to the show, what I do, folks, I look for different correlations that are out there, correlations that help you to understand what's going on inside the marketplace. The currency market is a great place to be looking for correlations. The correlation that best emulates the S&P 500 happens to be the Euro-Japanese yen currency pair. It is that cross pair that best emulates price movement inside the markets out here. On the bottom of my screen, you're taking a look at the S&P 500, and the top of the screen, you are taking a look at the Euro-Japanese yen. If we take a look at the euro, and this has been strong out here today, making a potential bearish engulfing candle. Got a lot of time left in the trading session out here, but so far, potentially the longest, widest range bar to the downside out here. It is a leading indicator. We'll see how this closes out the session today, but that may be giving us a clue. If we go take a look at the normal currency pairs that we look at, Give me a second here. And what I mean by that is the euro, U.S. dollar, the U.S. dollar, Japanese yen. Let's go take a look at that. Here is the Japanese yen. Here's the U.S. dollar Japanese currency chart here. You can see this also having a forming a bearish engulfing out here. It's really in the overbought territory. It has been traveling in overbought territory for quite some time. This will get back inside that RSI, get down to at least the midpoint, and we could be seeing the beginnings of a retracement in this very strong currency pair. If we are seeing a retracement, let me get rid of a couple of lines out here, give you an idea of targets out here. Now, you know the first target is going to be what? Sweet what? Sweet 382. Sweet 618 would be like the real target, but moving down just simply doing a 0.382 retracement, that would be nothing more than a normal dead cat bounce, a normal retracement. That would actually take the U.S. dollar Japanese yen currency pair down to about the $84.70 range. If we go take a look at the euro U.S. dollar on the daily chart out here real quick, that also pulling back this morning after yesterday getting into the overbought condition, also making a 1.272 expansion. Today pulling back. So we got the currency pairs pulling back here. Plenty of signals out there. Platinum up $33 right now. Gold up 11. Silver up 13 ticks. We'll be right back.
Yeah, it's always better when we're together.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, Plus, you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
To the races. We got the Dow up 45 points. The S&P off 7. Composite down 19. Of course, Apple leading the charge here. On the way down, Russell 2000 off $4.60. Microsoft up 9 ticks. Intel off 5. Google down $5 and change. Apple's off $7 right now. Trading out at $4.94 and change out here. And we'll go take a look at the daily chart just in the first 5 minutes of trading, which just ended just about, should be ending here, just ended. We had 2 million shares coming out of the tires of Apple yesterday on the move down, on the gap down, a little bit more strength volume-wise, had 3 million shares to the downside in that first 5 minutes out here. As we go now, take a look at the daily chart. Now, the numbers you want to be paying attention to today, for sure, 496.89, and I would say if you want to give it a little bit of wiggle room, 486.63, and let's go see what it is that Steve-O is talking about out here. We're going to put the daily chart on the screen. And first thing, I'm going to go ahead and blow this up. And what Apple did do yesterday was closed below that hammer candle. That hammer candle is that November 16th area. That low was 505.75. Closed below it on lighter volume. That had 45 million shares. Yesterday was a close, had accelerated volume coming into it compared to the prior session, but still 26 million versus 45 million. Does that make a difference, folks, when you close below a hammer candle? It is bad news out there because that is where the bulls are really hanging out. And when the bulls aren't there to defend their territory, you're not really sure where the market is going to go to. That's when you go ahead and take a look at just simple trading tactics out here. Now, what we also do, or the last possible place that the bulls here that you can see on a chart where they're hanging out at, this is on the left-hand side of the chart, is that high volume session from February 15th out there. That low is 496.89. That's why I'm using that price point. That's 53 million shares out there. A little bit of a swing point because you did have on the following trading session, it did trade just a little bit lower. That low was the 486.63 out there, trading at 491.90. So I'd say it's at once it gets below that 486.63 level, then what you're talking about is a bungee jump on the way down. It could be a 200-plus point bungee jump on the way down. Next area of possible support out here would be the gap up that is open, that has not been tested. That would be in about the 440-ish range out there back in the late January timeframe of 2012. You do have a gap out there, but I suspect that, you've broken this hammer candle, and unless the bulls run to the rescue out here, it is just simply a bad scene. You want to identify hammer candles on any stock chart that you trade out there because they really help you to understand where support is. In this case here, I don't use a hammer candle as a resistance area any longer. Once you break it, and it is look out below. So that's what we've got here on Apple, and with that being the case with Apple and its weighting structure inside the NDX, there's just no way that the market's going to go up with the NDX moving down out here. If we take a look at things that are popping and dropping, you've got Express Inc. up 18% this morning. They are up $2 and change. Let's see, were they out with any kind of numbers? I don't see anything. There we go. Let's see what their guidance was. They raised their guidance, their outlook to 72 to 74 cents. Verse is 62 cents out here I don't see when they are out with numbers, but they are the leader in the clubhouse. You got Oceaneering Inc., OII, up $2.29. That's up about 4%. Melanix Technologies, MLNX, up 3%. Santeris, SNTS, up 11% this morning. Mind Ray Medical, MR, up 3%. Those are the leaders in the clubhouse. On the upside that are over $1. To the downside, Apple, Google, Lululemon, out with earnings, I believe. I believe they missed their top-line numbers, and they have guided. Let's see, what did Lululemon do out here? Because that had been a high flyer. Just out with guidance. I guess here they have not released their numbers just yet, so they have, but I guess what they have indicated is they're going to miss their top-line numbers. In any event, down about 7% this morning, off $5 and change. We'll go take a look at that. SAP down about 4.5%, down $3. Fiserv, FISV off $3 and change. Cerner Corp, CERN off $2. Biogen, BIIB off a couple of bucks. Given Imaging off a couple bucks as well. So let's start by taking a look at some of these stocks here, popping and dropping. We took a look at Apple. Let's go take a look. Let's go up and take a look at MasterCard here. We have been following MasterCard. Now, MasterCard yesterday did not get down to the top of the gap. That is the January 8th candle out here. That high is 521.05. Got down yesterday to a low of 521.23. So we still have a little gap out here. If it doesn't get filled today, you want to still continue to keep your eye on MasterCard because of that potential for an island reversal on a very strong equity out here. So we'll continue to follow MasterCard for you. Let's go take a look at Lululemon, see what kind of volume is behind this move, and take a look at this stock chart. LULU is the ticker symbol. You've got some pretty good volume out of this. This also had some volume gap down recently as well. So let's pull the stock chart back and take a look at it, see where it is going. First of all, it's coming down into the area where it had its last sign of strength. Nice sign of strength. That was on September 7th, 2012. The low of that session was 67.10. The real breakout candle that you would use on this would be this little doji here from August 31st. When you take a look at breakouts, buying breakouts, one of the things you want to take a look at doing as a stock equity coming back to the breakout session is just take a look at the volume bars. Go to the least volume bar just prior to the breakout. It's usually going to be within a couple of sessions. In the case of Lululemon, that would be the August 31st candle. Only 1.4 million shares. Very next day, 2.3. After that, 2.8, 5 million, and then finally 17 million. That is where Lululemon is coming back to. However, this did have a gap down here recently, which was on January 4th. Moves down with 6 million shares out there. Today so far, in only 11 minutes of trading, down with 2 million shares. So this has got some volume as it attacks this area. We'll see if the bulls are going to stick around. And if we take a look at the breakout area here, if I go back to this candle, there we go. How about that? So as we come back to this candle, we draw I didn't even realize that that's actually what it did when it first came back there. But let's go take a look at it. So you can see I'm just simply using that little doji candle, that low volume day from August the 31st. Now, when it came back, that was 1.4 million shares on that day. When it came back and formed this reversal, this 3-day reversal candle signal out here, did it with 1.4 million shares. So it was 1.4 going against 1.4, but really you were benchmarking the 5 million share day. This is coming back with, looks like a little bit too much heat here right now. So if this area doesn't hold, what we will see is we will see it come back to its last area of support, which is the swing point from August 2nd, 2012. That's in the $52 to $55 range. That is on Lululemon. Trading out right now at $66 and change. Let's go take a look at let's see, what do we have here? SAP. Let's go see what this is doing. It's down about 4%, a little over 4.5% actually right now. SAP is the ticker symbol. So gapping down this morning with volume out here. Looks like this wheel head to this high volume bar out here, which is on July 12th. That is at the $59 level. It's at $78 right now. So this morning, breaking a swing point on the way down. That swing point is from January 8th. That had 1.4 million shares. Looks like it's trying to break that today. Already 1.4 million shares in only the first 12 minutes of trading out there. Let's go take a look at Fiserv. FISV is the ticker symbol. See what this is trading into. If I type this in here, FISV. and gapping down this morning, gapping into its last gap up session. Let's go compare some volumes out here. This equity Fiserv gaps up, of course, on January 2nd out there. It does with 892,000 shares. So it's coming into that breakout session here this morning, which would be the top of the December 31st candle, 79.10. That has 569,000 shares. However, this morning already moving down with 400,000 shares. It has at least rejected it. So the bulls here saying they are not done. Now, this also had a sign of strength, wide price spread, and accelerated volume on the trading session of December 5th out there. So this should have some pretty decent, if you take a look at some of these volume bars, we can see that the bulls have shown where they are at, and they are supporting this stock here this morning. If we take a look at the low of the December 21st session, 1.9 million shares. We'll draw a black line across that one. You can see that's where price moved down into, which was also the gap up, coming back to the breakout area. We can also see here you've got this entire trading session, which is on December the 5th out there. We'll put a red line across the top and bottom. So it should have some support as well. That is on Fiserv out here. The bulls saying, nah, even though you've gapped down, they are not ready to give up on this equity, or at least not at this moment. Let's go take a look at Express Inc. EXPR is the ticker symbol. They are having a nice morning here. EXPR is the ticker symbol, gapping up, second gap on the way up here. So let's go see what this is doing coming into the area where it most recently broke down. So here is a stock that looks like it probably is getting ready to set up a consolidation with both its gaps up and its gaps down. This morning here, looks like, so where is resistance on this? It's not tested just yet, but I would say you'd probably start taking a look at this equity right about here, which is going to be the top of this swing point from May 29, 2012 in the $19.42 range. This thing here actually this morning is moving down into the gap down from August the 22nd. So this had, let's count them, this had 1, 2, this did have a 3 gap, this did have 3 gaps down. Doesn't look like a 3-gap play because that first gap here looks to me to be larger than gap number 3. Did have 3 gaps down. Created, though, if you do take a look at this, how about this? Created quite an island out here. Take a look at that, folks. That island, yes, it did. So if we take a look at this equity, this is Express, EXPR. So we'll kind of keep this on our watch list. This has a one heck of a island bottom reversal formation. So this equity here gaps down on October the 2nd. Does it with 12 million shares. The evening session before that on October 1st, closing out at 15.01. Next session, the top of the session is 12.67. The bottom is $11.56. So does it with quite a bit of volume. Moves lower into the trading session on November the 14th out there, November 13th, getting down to $10.47, not doing with any high volume or anything like that. 2.4 million shares. But look at this island out here. It was formed an island beginning October the 2nd, so quite a bit of construction going on that island reversal all the way down to November 27th. The top of that November 27th level, $13.15. Yesterday's session got down to a low of $13.70. So you can see the island that this thing has created out here. I wonder if I've got a box way to draw that out here. Let me see if I do have this set up. Oh, Stevie does. So there is your island all colored in, and that is quite a island reversal candle. Still, though, this thing has got some real technical damage, but it's one heck of a nice island reversal out there. That is on Express. Let's go take a look at the ETF structure here. Let's go start with the first one that pops up on my screen. Let's go start with the small caps, the IWM. If we take a look at the IWM, trading out right now at 86.98. Still no great shakes down. Trading into the January 2nd candle. That high there is 86.91. So far it has rejected that level. Small caps. Strong little buggers, aren't they? No reversal signals really on the small caps, not yet. Let's go take a look at the diamonds out here. Lucy in the sky with diamonds. You've got the Dow trading out at 134.51. The Dow here Still not giving up, of course. It does have that resistance area, which is the downdraft day from October 19th. The high of that session is 134.80 out there. So the diamond's not ready to give it up. Let's go take a look at the SPYs. As we take a look at the SPYs out here, the SPYs just hanging out inside the September 14th candle. Of course, we took a look at the futures market. That cleared the September 14th high. The SPYs have not. The SPYs moving down just slightly this morning here, but still not even getting yet to the January 2nd high. That session being 146.15. It's not giving you much of a reversal signal. That leaves the Qs. Let's go see what party is going on inside the Qs. And here you go. The Qs now today testing. So here we're going to get plenty of information from the Qs. And the reason that I say that is if you take a look at resistance on the Qs, that's going to be your October 19th downdraft. So that high has been tested as well several times. That level is $67.27. That was tested on Friday. This morning, you're testing now the area of support. The area of support is the bottom of that January 2nd candle. If that area holds, says the market is not ready to start any kind of reversal here. The low of that January 2nd candle is $66.48. Trading at $66.45 right now. You can see this is an area that has been tested several times. Today will be another test. If the Qs do close below $66.48, most likely the Qs will travel all the way, at least to the top of December 31st, $65.25, just as the DAX has done already. 877-927-6648. Dow's off 32, S&P's off 5. We'll be right back.
It's always better when we're together. Yeah, it's always better when we're together.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern. on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. The Dow off 34 points right now. S&P down 6. And let's take a look at the bond market. The 30-year Treasury is what I've got up on my screen. The continuous contract, it is running into the area where it gapped down. That is the trading session from January 2nd. The top of that gap is at 146.1. It is at 146.110 right now. You get a close above 146.1, and certainly the 0.618 area of the most recent move down happens to actually be the very top of the gap. That is the December 31st low. That would be the 146.230 level. But so far today, just testing that gap area. And that's going to be an important thing to be taking a look at with regard to the market direction as well. This area here holds. Has to make you say, something to think about. It's going to need more volume as it gets up into that area. That area, again, being the gap that it's in, and also the December 31st candle. If we take a look at natural gas out here, natural gas, as we can see, getting back inside that rising price channel out here, may have been a false break to the top side. Not exactly getting inside with conviction yesterday, and not showing conviction here yet today. So, and when you're using these channel lines here, you got to give it just a little bit of room to the top and the bottom out here. So not having the conviction and follow through that it wants to stay inside that rising price channel. But it's early in the trading session. Light sweet crude out here, still not really backing off very much. Looks like a light sweet crude wants to move up into that $96 area. The bears having chances, having continued chances, and just getting thwarted, if that is a word, by the bulls out there. Silver trying to break above the body of the December 20th candle. That has just held silver in check. And now it is being supported here, at least yesterday and today, by the 20-day exponential moving average out here, but still plenty of trading time left. What silver has done, it's made a dead cat bounce. It has made that 0.382 retracement. Did that today. That was at the 31.20 mark. That's the retracement. That's the simple retracement off of the C to D leg. That is not off of your A to D leg. The C to D leg, where the C point starts on November 29th, that high is 34.39. So it's done the minimum bounce that it could or should do out here. So pay attention to silver and see if this area here holds. Gold also likely doing the same retracement. Let's go on that, take a look at it on that C to D leg. And most certainly it is. It's trading just above the 0.382 level as we speak, out at 1679, 1675 is the 0.382 retracement. If we go take over the minute left in the trading session, let's quickly go over and take a look at the financial sector out here. So the financial sector, let me just refresh my screen, make sure that we've got all of the active data. You know what, I'll tell you what we'll do. We'll take a look at the financial sector when we come back to doing the Money Masters show out here. Let's go switch over to the ES Mini 30. Let's look at the 30-minute chart out here. So I'd like to just kind of close the loop, because when we were opening the show, we were taking a look at the 1-to-1 A to B equals CD down. As we came into the 8:30, 9 o'clock session, had the bullish engulfing candle at 9. From 9 to 9:30, you had some additional confirmation. So far, you've seen a bounce to the 0.618 level. And it's going to be key. The bearish sentiment would be if, in fact, on this run up here, the ES Mini does not close above the 1464 mark. It's trading at 1461 right now. Thanks so much, folks, for being here. If you're off to start your day, make sure that you have a terrific Tuesday, and we'll see you in the morning. Otherwise, see you in just a few. Take care, and thanks for being here.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.